Welcome, this is John Sheely at Trader Country Club, and I'm going to discuss a real quick question here. Should you reduce your risk now, considering what's going on in the entire world? Primarily, we're discussing Russia. But before, we must talk about past results are not necessarily indicative of future returns, and that the trading of stocks, commodities, or foreign currencies involves substantial risk of loss. Let's take a look at the SPDR, SPY. This chart is with TC2000. It's one of our programs that we really enjoy at Trader Country Club. But I'm taking a look at the daily chart at the moment because I'm very serious that we have a great risk here. And recently, because of the colorization of the chart, you can tell that had an indication of a bearish trend. And it's actually been true for about 2 to 3 weeks. And we had a nice bull trend in November and December, but you then had a change of trend, which we discussed that in our courses. But we've been currently a bear trend. And here's the question. Should I put a large short position or go ahead and think that the things are going to change quickly and go back to a bull market? Or should I sit on the sidelines? I would consider sitting on the sideline, and it's primarily because of this. A lot of people, we have no idea what's going to happen with Russia. You've got over 150 soldiers sitting on the border, and they're not in a line at Starbucks. No, we don't know what they're doing, but obviously there's a chance that they're going to invade. And if that happens, a lot of people will have no idea what's going to happen. We don't know what the interest rates are going to do. We don't know about the crude oil market, which has already been in a bull market. Therefore, I would be suggesting to reduce your risk at this particular time. Now, in the daily chart, we are into a bearish trend. But take a look at the weekly, though. We've been in a long-term bull market now for quite some time. Started early in 2020. And it's been a very good, very strong bull market. And even for those traders who actually like swing trading, the swing trades and daily charts have been wonderful. You've had huge returns here. But now prices are now reaching the weekly 50-period simple moving average. Now, research indicates that a single close underneath a 50-period simple moving average, when the moving average is sloping as you're seeing here, this is not enough information to tell you that this is going to be a bearish trend. But at the same time, we have to understand Russia is sitting right next to a potential invasion with who knows what reactions the rest of the world. So that's why I say we're on the sidelines, make that suggestion when we will wait for a little bit more information, because we're going to invest and trade for a longer time period than just a week or so. So the fact that you want to try it to say, well, no, I'm going to go ahead and go short, go ahead and go long, you have no idea. It's a pure flip of the coin what happens. And that is not type of trading that I invest in or trade against, where I can just flip a coin. Am I going to win money or lose money? I don't do that, and I do not suggest that with you as well. Now, the triple Qs for the NASDAQ 100, that's a different question. We are beginning to get red bars here, which indicates, because of the algorithms that I've used at TC2000, And I also have the same kind of information that I use for TradeStation. But we are into a bearish trend, longer term. And therefore, I kind of agree with you that if you find the right stock that you can feel comfortable that they're in a well-established bearish trend, and that you don't think too much of a risk if somehow prices go in the direction, because certainly the Russian invasion has been solved by the rest of the world. It's possible that the whole market goes back up, because remember, if the S&P 500 goes back into a nice strong bull market, the NASDAQ 100 is going to be changing too. But right now, in regards to the NASDAQ 100 and many stocks, they are in a bearish trend. I'm showing you the diamond, which is for Dow Jones, and it is just now getting underneath the moving average. It's not enough information still to say that this is a longer term bearish trend. So it's very similar to the Dow and the S&P 500. There's not enough information to bet that we have a long-term bearish trend. But speaking of long-term bearish trend, let's take a look at the spider for a longer term period. I'm showing you the spider now on a monthly chart, and obviously you're seeing the blue bars here. That is because, remember, I always tell you that there is a bull bias in stocks. Prices tend to move quickly, but eventually the market goes back into a bullish trend, and you can look at that in regards to 2015 all the way to current time. The only reason I'm talking about and show you this monthly is take a look at 2019. We had a pretty good decline in 2019. Same thing in 2020. Rather sudden price collapse. Eventually moved into a bullish trend, as I mentioned, but it is still possible. There is a little bit of a history that yes, prices can fall quickly a long distance, and that's why I'm saying we are a long ways from understanding whether or not prices can fall that far that quickly. We have a history of that occurring from time to time. Let's take a look a little bit more history here. Of course, I'm showing you the 2009. This turned into a big collapse here. However, the fundamentals were very strong in regards to a bearish direction, so that was understandable why that was cursed. But it is possible. This is why we always talk about do not put on a position and just let something ride it down to the dust, down to the dirt. If you're losing a large amount of money in a position, close it. You have no idea how low prices can get. Take a look at Zoom and other stocks that have gone down at more than 50%. So do not place a position without using some kind of stop loss. But I'm just showing you here, yes, you can have a huge decline if the fundamentals are setting up for a bearish trend. So I'm returning back to the spider, and for those who are able and feel comfortable in going short in regards to stocks or commodities or other positions, this actually was a bearish signal of going short on the spider. In this particular case, we had actually a classical type of price movement that is a corrective pattern, and we came down. And for those who are only able to watch the market at the end of the day and setting up positions for the following day, the day right here would be a short position. Now, we always believe that trading is not a light switch to where it's either on or off, especially profits. Instead, we like what we call like a dimmer. Take partial positions and partial trades, partial closes and closing certain small parts of your position. So those who may have indeed gone short, I would have already reached a first target and taken profits on that. And then you can actually put in a stop loss of your entry. And we discussed that, of course, in our courses. But in this particular case right here, for those who are short, just hold on to the position, take partial profits, make sure you don't end up where you're losing money. Instead, we're going to try to put a position on so that if you have put partial positions, go ahead and close some of it, and you can let it ride just in case we have into a longer term bearish trend. So again, guys, if you have not a position at this time, then you may consider at least not adding any risk to your particular position. I'm not necessarily saying that you want to sell any of your stocks that you had a good reason to be long. I'm just saying be very careful. You have no idea what's going to happen this coming week. This is John Sheely at Trader Country Club.